Good afternoon from and Asia Pacific. I'm Jeffrey Halley. Well, the highlight of this week is definitely going to be one particular event, and like the Lord of the Rings, it is one ring to rule them all, and that is the Federal Open Market Committee meeting this evening in the United States with the Federal Reserve. Now, markets have really been on hold this week ahead of it. They've almost been in a holding pattern across most asset classes. And we have seen investors just selling out a few equities, a bit of commodities, a bit of precious metals, lightening up risk ahead of that meeting. Unfortunately, I don't think this meeting itself is going to be a live one. The Federal Reserve governors have been very, very vociferous in their dovishness, shall we say, over the last few weeks, telling the world that they believe that inflation is transitory and not the sticky wage price index or wage price spiral inflation. So I don't think we can expect to hear any language whatsoever about the dreaded taper word tonight, and they will be as dovish can be. That should be positive for equities into the end of the week and could possibly see the bond rally resume as well. Now, whether that puts pressure on the dollar or not, well, that's up in the air, to be honest, because the US dollar has been very firm of late, even though bond yields have fallen. And I believe the reason for this is if one looks at the TIX data, which is the data that measures the amount of securities that foreign investors are either buying or selling in the United States on a monthly basis. Yesterday's TIC data came out at a positive balance of $100 billion, which means that overseas investors bought over $100 billion worth of US securities last month. That is an awful lot of US dollars to buy in 1 month. And the number before that in the previous month was $250 million. And I think this ongoing demand for US bonds and securities from international investors, that's what's holding up the US dollar somewhat counterintuitively, even though US bond yields are falling. And let's remember that when bond yields are falling, prices are going up. So assuming that the FOMC is a non-event, what else is going on in the markets? Well, let's have a look at oil. So if we look at WTI initially, we can see that oil WTI prices are at almost multi-year highs at the moment. But if we look at the box at the bottom, we can see a technical indicator called the Relative Strength Index. Now, I like following this because it's actually a very good indicator of turns in the market when it moves to either severely overbought or severely oversold conditions. And if we look at the WTI chart, we can see that it is in fact overbought in the short term. Now, I'm not for 1 second saying that oil is peaking or anything like that. If we look at the futures curves for both WTI and Brent, they are very, very strongly indicating that demand in the physical market is remaining very strong indeed. But what we could see from a trading perspective is oil making perhaps a potentially sharp correction lower, possibly by the end of the week, and I believe it could run for $3 or $4 a barrel. If we look at the Brent crude chart, well, we can see a similar setup there as well. The RSI is in overbought territory, and again, I can't emphasize enough, it is usually a very good indicator that a sharp correction is on the way. And let's be honest with ourselves, there is probably a lot of speculative long positioning in the market at the moment, and it's probably not got very deep pockets. We're seeing some other action in the commodity space as well. China has announced more commodity clampdowns today, and they're releasing commodities such as copper and aluminium from their strategic reserves to try and control prices. If we look at the copper chart, we can see it made a very interesting break earlier this week. It broke through 441.80 a pound. I'm in imperial measurements here. And that break does suggest that we could see more downside, almost as far as $4 a pound. And that one bears watching this week as China continues to try and control commodity prices. That's all for me, and I wish you a wonderful week ahead.